Hello team, welcome to the second lesson of mastering the setups, okay? In this lesson or section, we're going to be looking at market structure and everything you need to know, okay, on market structure to be able to master my setups, okay guys? So, very fast, what is market structure or what do we use market structure for, okay? So, we use market structure to identify if price is on an uptrend, downtrend, or ranging, okay? And we do this by looking at the highs and lows and if price is breaking them, okay? Again, very basic knowledge. You should know what uptrend, downtrend, or ranging price scenarios are, but still we're going to go over them. So, yes, okay? Let's start with uptrend. Very simple. When price is on an uptrend, okay, when the market structure is trending to the upside, price is making higher highs and higher lows, okay? Higher high, higher low, higher high, higher low. If you see the prices, okay, the highest prices living are all the time higher and the lows prices living are all the time higher. This means it's on an uptrend, okay? Later on, we will see a real life example, guys, so don't stress. You will be able to see this. So don't stress. Next, we have ranging, okay? Which basically means equal highs and equal lows. So the price is basically trading sideways, okay, in a range. It's forming equal highs and equal lows. The difference between uptrend and ranging, if you look closely, the price is forming higher highs and higher lows. When it's uptrending, when it's ranging, it's forming equal highs and equal lows, okay, on a same line, the same line. Okay, then downtrend. Okay, downtrend is the complete opposite as uptrend. So basically, price is forming lower highs and lower lows. Okay, if you look closely, price comes to a certain price. Okay, leaves a low right there. Price does a high, which is lower than the last high. Then price does another low, which is lower than the last low. Price creates another high, which is lower than the last high, and so on. Okay, this way it forms a downtrend. Okay. Let's move on to break of structure. Okay, BOS means break of structure and CHOCH, which means change of character. Okay, this is also very useful to read the market structure to identify the trends. So, for example, when price is on an uptrend, as we said, price is creating higher highs and higher lows. Okay, higher high, higher low, higher high, higher low. If price is on an uptrend, that means price is breaking structure. Okay, from the last higher high, price is breaking above to form another higher high, okay? It's a higher low, then breaks above again to form another higher high, okay? So as we saw, this is the last slide. As we saw here, higher high, higher low, higher high, higher low. So if you see when price creates a new high, it is breaking above the last one, okay? This is a break of structure. That's simple, okay? Break of structure indicates a continuation in a trend, okay? So if it's an uptrend, break of structure will indicate that price is creating higher highs, okay? All the time, higher highs, higher highs. Okay, so as you see, higher high, higher low, then price breaks above the last higher high to create another higher high. Okay, higher low, then price breaks again above. This means we are on an uptrend, okay? When price is ranging, we do not have any break of structure to any side, okay? So as we see here, equal highs, equal lows, there's no break of structure, okay? As we see on the uptrend, price is breaking the highs, okay? Price is breaking the highs. There's a break of structure, okay, to the upside. When price is ranging, we do not see any break of structure, okay? Price is staying inside the range. Then when it's a downtrend, it's the complete opposite as uptrend again. It's breaking the lower lows, okay, to form new lows below, okay? So as the uptrend was keeping going up, okay, it broke the higher highs to keep on printing higher prices, okay? Downtrend, the break of structure is the complete opposite, okay? It's breaking the lower lows to create lower prices, okay? As we can see here, very, very straightforward. Then let's look at the change of characters, okay? So a change of character to the downside basically means a break of structure, okay, but which indicates a reversal in the trend, okay? It's very simple. So as you see here, price is creating higher high, higher low, higher high, higher low, higher high. Okay, break of structure to the upside. This means we are on a bearish trend. But then at some point, price breaks below the higher low is formed, okay, to create a new lower low. This is a change of character. This indicates a change in trend, okay, and then we are expecting price to create a lower high, lower low, lower high, lower low. Okay, exactly the same with a bullish change of character. Okay, with a change of character to the upside. So price is in a bearish trend. Okay, it's breaking structure to the downside, forming lower lows. Okay, until it comes to a point where price breaks the last lower high, giving a change of character and giving birth to a new trend. Okay, so we are expecting price to create a higher high, higher low, higher high, higher low, and higher high. Okay, so basically a break of structure is a break. It's basically a break which indicates a continuation of the trend. A change of character is a structural break which indicates a reversal in the trend. Okay, team, very basic, very straightforward. If you do not understand it now, you will, if it's not with 5 hours of practice, it will be with 10. But again, this is very straightforward and very simple. Now, also something very important, very interesting is the multi-time frame analysis, okay? Because when you are trading the market structure, you can see plenty of different market structures depending on what time frame you are looking at, okay? So this is two fragments, the exact piece of a chart, okay? This is on the 4-hour time frame, and this is on the 15-minute time frame, okay? So this is, let's say, from the 1 of January to the 30th of January, okay? This is the time span. And this is also from the 1 of January to the 30th of January, okay? This is on the 4-hour time frame. This is on the 15-minute time frame, okay? So look very closely. On the 4-hour time frame, you can only see there's a bullish structure as there's a bullish structure as price is creating higher highs, higher lows, and it's breaking structure to the upside all the time, okay? Which means on the 4-hour time frame, very straightforward, there's a bullish structure, okay? But what happens if we get the exact same piece of the chart and we analyze it on the 15-minute time frame, okay? So, as we can see, we have bullish and bearish structures, okay? So here, this fragment right here, price is breaking structure to the upside, creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. But then price creates a change of character here, okay? Which this high right here would be this high right here. So price creates a change of character, then starts a bearish trend, okay? Bearish trend, with loads of break of structure, higher highs, higher lows, okay? Which again, this piece right here is this move right here, okay? Then price comes to this low and creates a change of character, okay? Then we expect price to start a new bullish trend, okay? Which this is this low right here, creates a change of character right there, and then gives a bullish trend, okay? And so on, and keeps on. So it's basically fractal analysis, okay? This is the 4-hour time frame. This is the same fragment of the chart, but on the 15-minute time frame. And again, on the 4-hour time frame, you can just see a very clear bullish structure. But if you look at the same time frame, at the same fragment on the 15-minute time frame, you will see plenty of different structure. You will see change of characters. You will see bullish, bearish. Okay, you might see ranges, etc., etc. etc. Okay, so the key takeaway of these guys, or the best approach, which again we will be looking at this when we start diving even deeper into the setups, okay? So the best approach is to identify the structure on the larger time frames, okay? So for example, I will hop onto the 4-hour time frame, I will see this and I will say, okay, it's a bullish structure, okay? But then refine your entries on the lower time frames, okay? So I will see it's a bullish structure, I will focus on looking for buys. But then if I do not know where to buy, or I want to have very tight stop losses, then I'm going to wait, okay, to see on the lower time frames the market structure, okay? And for example, if it's a bullish structure, I'm going to wait for price to print a bearish trend inside this bullish structure, okay? A change of character, and then I will be buying, okay? This way, I know I am buying at the best price in the larger time frame, bullish structure, okay? By doing so, by refining the structure on the lower time frames, I will be able to snipe much more my entries, okay? And I will be able, just to minimize risk, snipe more and have tighter stop losses, okay? Very straightforward. We will be looking at this. We will be looking at my entry models, okay, based on multi-time frame analysis later on, okay? But at the moment, just have this clear, okay? Very straightforward market structure. Now let's have a look at a real life example, okay, at how the market structure looks when trading real life. So this is, if I'm not mistaken, the daily chart, okay, for gold. And here we have three different types of structure, okay? Bearish structure, ranging structure, and bullish structure, okay? As we've been looking all the time, very easy. Bearish structure, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and break of structure, okay, to the downside, okay? Price is breaking structure to form lower lows. Price is breaking structure to form lower lows. Then price comes to this range, okay? Price forms this low, forms a high, then forms a low, which is equal to this low. So we have equal lows right here. We know we are in a range. Then price forms this high right here, which is equal high to this. So again, we know we are in a range. But then price forms this higher low, which is higher to this low, and breaks structure to the upside. Okay, remember we were trading, we were breaking structure to the downside. Now it breaks the high to the upside, which means this is a change of character. And then we start a bullish trend, higher high, higher low, break of structure to form a higher high, higher low, break of structure to form a higher high, and so on, so on, and so on, okay? So if we go back, very simple. The downtrend, price was forming lower lows, lower highs, break of structure to form lower lows. Okay, let's have a look. So it's basically this right here, lower highs, lower lows, breaking structure to form lower lows. Ranging equal highs, equal lows. Ranging equal highs, equal lows. Then bullish structure, price is forming on the bullish, sorry, where is this? Right here, yes, sir. Higher highs, higher lows, break of structure to form higher highs. This is the bullish trend, okay, and the change of character. As we were coming from a bearish trend, okay, and price gave that change of character, and then we started seeing a bullish structure, okay, which that refers to this right here as a change of character. Okay, guys? Again, we will go back over this when we dive deeper into the setups, but this is very basic. You must all know this. You must all be able to identify market structure immediately when you open the charts. And yes, team, I will see you all next lesson. And I wish you all have an awesome day. Oops.